In this video, I am going to explain sales budget. So first let me explain the basic concept of sales budget. See, in the budgeting process, sales it's a starting point as sales is the key factor in many cases. So preparing the sales budget, it's a very important and it's a very complicated also. So this particular budget is probably the most difficult functional budget to prepare. The reason is the problem with preparation of sales budget lies in two things. One is correct forecasting and estimation of sales quantity. Preparing sales budget, it's a very complicated one. The reason is if the sales budget is to be done for a new product, if forecast or estimation go wrong, all other functional budgets which are based on the sales budget including the master budget also go wrong. See, the sales budget will show two important things. So these are the two important elements in the sales budget. The first one is quantity of finished products to be sold, and second one price at which they are to be sold. So these are the two things will be shown in the sales budget. So the sales budget is prepared to find out the quantity of finished products to be sold and price at which they are to be sold. So now let us see what are the different ways of sales budget. These are the 5 different ways of sales budget. So the first one is product wise, second one territory wise, third one period wise, fourth one customer wise, and the last one salesman wise. These are the 5 different ways of sales budget. The first one is product wise. Here budget to estimate sales quantity of each product. So according to this method, we need to have a separate column for each and every product. For example, if you are going to prepare sales budget for 3 different products A, B, C, in such case you need to have a separate column for A and separate column for B and separate column for C. So this type of sales budget is called product wise sales budget. And second one, territory wise. So according to this method, we need to have a separate column for each and every territory. For example, south, east, north, west. And third one is period wise. So period wise means according to period. For example, sales budget for a week or sales budget for a month or sales budget for a quarter. Okay, sales budget for yearly. Okay, so in such case you need to have a budget according to period wise. The next one is customer wise. Here different categories of customers are to be finalized, and then for each class of customers a budget is prepared. So this budget is helpful when special discount are to be offered or special terms are offered for some specific customer. So in such case you can go for customer wise sales budget. The last one is salesman wise. So according to this method, the budget is prepared when sales are made through salesman or agent regionally, and each salesman accounts for a significant portion of total sales. So according to that you can prepare, you can have a separate column. So this type of sales budget is called salesman wise. See the problem. John and company submits the following figures of product X for the first quarter of 2015. Sales unit is given for 3 months. January 10,000 units, February 8,000 units, and March 12,000 units. Selling price per unit 100 rupees. Target of first quarter 2016. Sales units increased by 25%. Selling price increased by 10%. And additional information, a study of the past experience reveals that John and company has lost about 3% of billed revenue in each quarter because of returns, that is 2% of lost revenue, and allowance and bad debts 1%. Prepare the sales budget incorporating the above information. So this is the information. So this one is last year, that is 2015 first quarter information is given. This is the actual sales and selling price is 100 rupees. So these are the last year, that is past information is given. With this they ask you to prepare sales budget for the first quarter of 2016. You need to incorporate this. You need to increase 25% of 10,000 and 25% of 8,000 and 25% of 12,000. That will be added along with the last year information. And the selling price also increased by 10%. So last year selling price is 100 rupees. No. So this year 10% add. So 100 rupees into 10%, 10 rupees. So the new selling price is 110 10 rupees. That is estimated selling price is 110 rupees. So the last year information reveals that 3% of billed revenue in each quarter because of returns and bad debts. So they lost 3%. So this will be incorporated in the sales budget for the year 2016. This sales budget, it's a periodical basis. So here we have a 3 months information. No, they ask you to prepare the first quarter of 2016. So this is a periodical wise sales budget. This is the format. So sales budget for the quarter ending 31st March 2016. Particular column, this one is January, February, March, and the last one is total. First you need to start with estimated sales in units. Look at the problem. So last year information is January month 10,000, February 8,000, March 12,000. So this year they are going to increase the sales units increase by 25%. So you need to add 25% with January, February and March. Then you will be getting estimated sales in units. Look at the working notes. January month last year sales in units 10,000, February 8,000, March 12,000. So this year they are going to increase 25%. So 25% on 10,000, 2,500. 25% on 8,000, 2,000. 25% on 12,000, 3,000. Now you will be getting total estimated sales in units. For the month of January 12,500. For February 10,000. For March 15,000. So these are the estimated sales in units. Estimated sales in units: January 12,500, February 10,000, March 15,000. Total 37,500 units. The next one is you need to multiply with the selling price per unit. So last year selling price per unit is 100 rupees. So in the future they are going to increase the selling price increase by 10%. So 10% on 100 rupees is 10 rupees. So 100 plus 10 is equal to 110 rupees. Selling price per unit 100 plus 10%, no, 10 rupees. Total 110 rupees. Now you need to multiply 110 with the estimated sales in units. 110 into 10,000, 110 into 15,000. So you will be getting sales value. 12,500 into 110 is equal to 13,75,000. Next 10,000 into 110, 11 lakhs. Then 15,000 into 110, 16,50,000. So now get the total. 13,75,000 plus 11 lakh plus 16,50,000 is equal to 41,25,000. 41,25,000. Okay. So this is a sales value in rupees. So now you have got the estimated sales value in rupees. Okay, we have started with estimated sales in units and we have multiplied with the selling price per unit. We have got sales value in rupees. Now just see the problem if there is any additional information regarding sales budget. The past experience reveals that the company has lost about 3% of the billed revenue because of 2% return and bad debts 1%. So altogether 3% loss. This will be subtracted from the sales value. Less returns and bad debts. How much? 3% on sales value. Okay, so you have to find the 3% on each and every month so that you can subtract the value from the sales value. So 3% on 13,75,000. How much? 41,250. 3% on 11 lakhs 33,000 and 3% on 16,50,000. 49,500. Total 1,23,750. 13,75,000 minus 41,250. 13 33,750 for the month of January. For February, 10,67,000. For March, 16,500,000. Total 40,01,250. Okay, so this is a net sales value. This is estimated net sales for the first quarter of 2016. Hope you understood this concept. Thank you.